If you are going to remember just one thing about this video, remember this. The higher the cap rate, the higher the risk. And the lower the cap rate, the lower the risk. Yes, we all want high cap rates, and there's nothing wrong with that. But are you willing to assume the additional risk that come with it? Hi, my name is Alex Casablanca. We are a boutique brokerage firm based in Orlando, Florida, specializing in selling triple net investment properties. We represent triple net buyers and 1031 exchange investors as well in finding and negotiating the best triple net property according to their investment goals and risk tolerance. Buying a triple net lease property will be one of the most important financial decisions that you will ever make as an investor. So it is very important that you choose wisely and avoid these most common mistakes that could affect your investment in the future. Buying or pretending to buy a triple net lease investment property with a high cap rate, but ignoring or not willing to assume the risk involved. The cap rate is the first focus of attention for every investor. We all want to buy a property at the highest cap rate possible, and there's nothing wrong with that, and it is perfectly understandable. However, the cap rate is in direct correlation to the level of risk involved in a particular transaction. It is important to highlight a very basic concept of investment. The higher the yield, the higher the risk, and the lower the yield, the lower the risk. This simple concept applies not only to triple net properties, but any type of investment, whether it's real estate, bonds, mutual funds, among others. Bear with me on this. Every property that is being offered at an above average cap rate will come with a higher level of risk, whether it's just a few years remaining on the lease, or a substandard location, or a weak franchisee, among many others. And now the question is, are you willing to assume a higher level of risk in exchange of a higher cap rate? Every investor has a very different risk tolerance profile. Some investors are conservative investors and feel more comfortable with just a low-risk passive income investment, while some investors are risk takers and they are willing to assume a higher level of risk in exchange of a higher cap rate. Remember the key concept here. The higher the cap rate, the higher the risk. And the lower the cap rate, the lower the risk. None of those two extremes are necessarily wrong. As an investor, you have to determine what is your risk tolerance, and then set your cap rate expectations according to the level of risk that you are willing to assume. Does that make sense, right? Certainly, there are excellent opportunities in the market to buy a high cap rate triple net property. I'm going to share with you simple tips to find and to buy a higher cap rate triple net property. Number one, define your risk tolerance and cap rate expectations. As I explained before, high cap rate properties will come with a higher level of risk. So you have to determine if you are willing to assume a higher level of risk in exchange for a higher cap rate. Remember, the better the area, the stronger the tenant, and the longer the lease, the lower the cap rate will be. When a property is missing one or more of those key elements, the cap rate is going to be higher because the risk is higher. Remember the key concept here. The higher the risk, the higher the cap rate. The lower the risk, the lower the cap rate. Define the minimum years remaining on the lease you are willing to consider. The typical high cap rate triple net property with a cap rate above 7% will have less than 10 years remaining on the lease. Most of the times, less than 5 years remaining on the lease. The concept of uncertainty comes into place because of the fact that we don't know if the tenant is going to renew the lease or not at the end of the lease. That higher level of risk is precisely what pushes the cap rate higher. The fewer years remaining on the lease, the higher the cap rate will be, but the higher the risk will also be. Now, the question that you have to ask yourself as an investor, Am I willing to assume a higher level of risk in exchange for a higher cap rate? That's a question that only you as an investor can answer for yourself. Define the type of tenants that you are willing to consider. As I explained before, the cap rate for top corporate tenants such as McDonald's, Chipotle, Chick-fil-A, Starbucks, 7-Eleven, Wawa, among many others, will be lower because those are strong companies and the implied risk is lower. If you only want to consider top corporate tenants, then you will have to lower your cap rate expectations. Other type of tenants, such as Dollar Generals, Walgreens, CVS, Dunkin' Donuts, will typically come with a higher cap rate because in one way or the other, the risk is higher. It is important to notice that no matter how strong the tenant is, if the property has just a few years remaining on the lease and it is not on a top market location, the cap rate is going to be higher because the risk is higher. Hiring an experienced and knowledgeable buyer's broker that can assist you navigating the complexities of the market would definitely help you to avoid those critical mistakes. We specialize in representing triple net lease buyers and 1031 exchange investors nationwide USA. We have the knowledge and expertise to guide you along the way, from market research, identifying potential properties, submitting offers and negotiating them, due diligence, up to the closing table. We have helped many triple net buyers and 1031 exchange investors in finding and negotiating the best triple net property according to their investment goals and risk tolerance. Moreover, we represent our buyers for free since we get paid from the seller. And we also pay for our buyers' closing costs up to a maximum of $10,000. This incentive will offset and in some instances will cover completely the major buyer's closing cost expenses, such as title fees, attorney's fees, recording fees, among others. We are the brokers that give you more in exchange of your trust. If you have any questions or might need guidance with your upcoming triple net lease property acquisition, feel free to contact me directly and I will be in contact with you. Well, you got all the way into the end of this video. So thank you very much for watching the video entirely. And if you found this video helpful, please give it a like and consider subscribing to the channel for more videos about triple net lease properties. If you want to know more about the best triple net properties to buy for your 1031 exchange or for your triple net acquisition, you can watch this video here that will tell you how to do it. So thank you so much again for watching this video, and I'm looking forward to be your broker in your next triple net property acquisition. Have a great day.